Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is June 14th edition of Market Outlook. Well, certainly the chop continues. Uh, let's get into it right away. Wait, before we do that, I will just want to remind you to get this free video newsletter every week by going to www.marketgauge.com and signing up for it, and you will get and receive the text version and this video free every week. Okay, in terms of the overall chop in the U.S. equities market, as you can see, that is continuing. Um, you had a couple of closes under the 50-day moving average in the spiders. Same thing in the Dow, which we'll get to in a second. But the market really couldn't close under there. You got a pretty violent, almost 2% bounce back above the 50 and the 10-day, only to fail again on Friday. So the market continues in this sideways action and with no decisive move either way. Now, there are periods of time where this sideways action can continue on for long periods of time. Now, the headwind with the interest rate environment, the ongoing and probably continually ongoing situation with Greece is definitely a headwind. On the other hand, the market is still firmly in overall bullish territory, especially when looking at the longer term trends. We're just going sideways. There have been periods over the years where this has persisted for 6 months, a year, even a year and a half or two. It's not uncommon. So it may be the case that you have to dig in here and get ready for even more sideways action. But there's always the wild card with Greece and the euro just imploding. So we're going to keep an eye on that as well. Let's take a look at some of the market indicators and internals. As you can see, the McClellan oscillator, which looks out over a couple weeks, generated a bit of a buy signal on that sell-off. So what I would consider a rather weak sell-off, a rather weak signal on the McClellan, because we like to see the confirmation in the shorter term market internals as well. And as you can see, the advanced decline is just really dying here. So the breadth is really, in terms of advanced declines, really falling down, which is a cause of concern, but it is in sort of oversold territory. Now, on the other hand, the up-down volume also pretty quiet and lackluster, but as you can see, not enough to generate an oversold reading quite yet on the up-down volume. Not enough advanced decline and strength to generate a buy signal. So what I would look at this and say, overall market internals are slightly negative here to the neutral side. Again, the McClellan meager bounce up without the confirmation on the shorter term time frames, and that along with advanced decline really coming down here is very mixed at best, and that's all we can say there. In terms of sentiment, volatility, the short-term volatility versus long-term volatility, more of the same, sideways action. Remember, we had said that over the last 4 months or so, the level that we had reached late last week often is an indication of a bounce area, but again, in a more extreme situation, you need to get down to that 1.0, this bottom line here, which we have not. So plenty of room either way. And again, sentiment reading off of the volatility, the options volatility between short and longer term, or 1 to 3 month. Basically, a slight, I would call this a slightly negative reading, but more towards the neutral side. So not much there. In terms of the absolute values, the VIX continues to drop. It actually touched the bottom of the Bollinger Band, and this has continued to just get more and more complacent readings. So again, although this is not what I would call another bona fide buy signal, sell signal, or buying the VIX off of this, because we did not really close under it. We touched, closed a bit over it. So again, sentiment definitely complacent here as the VIX just continues to drop. So that is definitely more cautionary, but not a full-fledged sell signal on the market quite yet. We did have one. Nothing really occurred over the last 10 days. It sort of negates the signal, right? We touched down here. It did look like we'd potentially would get a sharper sell-off. We did get a little bit of a sell-off, pretty muted, maybe 2% or so. Generally, we look for more. That's normal trading range volatility. But again, if anything, sentiment definitely indicating complacency. So again, that's a bit of a negative. So looking back at the overall picture, you can see that the trend overall sideways on the short to intermediate time frame. Longer trend, no question, still bullish, with sentiment getting a little bit frothy to the market internals, just very mixed as well. So taking a look at some of the weekly ratios in terms of sectors. Water, PHO, certainly, as you can see here, outperforming the spiders by a little bit after definitely touching lows not seen for a couple of years, but definitely improving relative to the S&P. And you can see this is a weekly chart up here relative to the S&P, which is sort of starting to roll over a little bit here, but really still into this sideways action that the beginning of 2015 brought in. So the leading sectors continue to be biotech, IBB, Cure, healthcare, and of course the standout has been the financials and KRE, which we've been in for quite some time. And finally, this kicked in, and you can see the key leader this week is KRE and the financials. Also noteworthy is that IYT continues to be a drag, and that is a concern certainly for Dow theorists. But the Dow theory and the non-confirmation is a series of non-confirmations both on the upside and the downside. But again, IYT, transportation, continues to deteriorate. Let's take a look at some bonds here. Bonds overall, we hit basically almost to the tick the bottom end of the channel. We got pretty much to an oversold reading as we did that, had a bounce. Now what's interesting, you got a 50-day cross of the 200 going into a bearish phase. So with the short-term oversold here in the TLTs, the bonds, I wouldn't be surprised to see maybe a test back up to this declining 50 and rolling over 200. So it looks like on the daily charts that you've really rolled over, and you're into on the daily charts a continued downtrend. Now if you take a look, which is interesting, at the weekly or the longer term charts, let's go into the weekly charts here. So this weekly chart is really telling you a different story, because clearly what we did is we bounced underneath this long-term 200-week moving average, although closed under the 65, which is fairly important as well. So super long-term trend in bonds still intact, right? However, definitely moving what we would call into a warning phase. So the daily charts breaking down, the longer term weekly, especially the 200-week moving average, still intact. So very mixed picture. Markets clearly in transition. We'll take a look at the monthly. These are super long-term trends. So this chart, the monthly chart, tells a completely different story than the other two we're talking about. Long-term rates are still trending down. Hence the inverse relationship. TLT's still in a bullish phase because our fast 23-month moving average, we touched down on it, bounced and closed above it, while the longer term, the 80 monthly, still intact as well. And in fact, if anything, you can say that the condition on the monthly chart on interest rates is still bullish, meaning rates are still in a downtrend. So mixed picture, right? Long-term trend in rates clearly down. On weekly charts, definitely in transition. In between the warning, in between the two moving averages, that puts it into a warning phase. However, we did enter a bearish phase on the shorter term time frame, the daily chart. So definitely in transition. Let's take a look at a couple of other things. Global stocks. This page is a page of all the different key global stock markets with a 20-week moving average on it. The FXI, as you can see, well above the 2014 highs and well above the 20-week moving average. The S&P here, as you can see, attacking that 20-week moving average. So the question is that rising 20-week going to stay intact, or are we going to potentially penetrate this as the rates or troubles in the euro put pressure on the U.S. equities markets? That remains to be seen. Meanwhile, longer term trend intact. Also noteworthy, same type of scenario in Japan, doing quite well. We touched down on the 20-week moving average, closed well above it, and as you can see, well above the 2014 highs. So China, Japan, US still leading. Things that are noteworthy is Switzerland. As you can see, Switzerland attempted to take out its highs of 2014. It did. We have a non-confirmation, although the 20-week is still rising and intact. So we're going to see if we can get some more strength and in Switzerland. But meanwhile, it basically has failed a test of the highs of 2014. Taking a look at commodities, silver basically trading within this bigger down channel. We're basically in the middle of this channel, although we closed marginally under the 20-week moving average, and also failed the breakout of this trend line, which is an internal trend line to the larger channel. So we're going to be watching this 20-week moving average very closely, but meanwhile, market seems to be under pressure at that moment, but we're pretty close to that swing level, and we'll want to take a look at that. So right around and above the $16 level in SLV would be a potential sign of the down move in metals is over. On the other hand, much more of a breakdown here. You're basically going to be testing the lows and probably head to new lows as well. So marginally hanging on here. Let's see what happens in silver. Similar situation in gold. Let's go back to the gold chart here. Okay, similar type scenario. sideways action. We had that really nice move. Looked like potentially the market had found its bottom, but again, sharply accelerating to the downside now in GLD on the moving averages, but still in the middle, what I would call this trading range. So a break of 110 in GLD would probably give you a move down to about 100, and that equates to about $1,000 in gold bullion. On the other hand, a move above the high from 2 weeks ago would also clear the 20-week moving average, so that would be sort of a double confirm. Let's watch above the highs of 2 weeks ago, which is about the 115.50 level. All right, that's it for now. As you can see, you got a pretty broad picture. Markets, there's nothing really super explosive in the overall markets here. Equity markets, mostly sideways, with a couple of leading ones that I pointed out throughout the world, mostly in Asia. Bonds definitely in transition. Short term on the daily charts breaking down. However, longer term trends still intact. And we're watching what the Fed does, and obviously what happens out of Greece and all the noise from there. Hope this helps. See you next week. Bye for now. This is Keith Schneider, CEO, MarketGauge.com.